Welcome back to HODL, a crypto asset conference. My name is Shivani Agarwal and I will be your host for this session. Before we kickstart the session, we would like to thank our title partner ZepPay and CoinDCX, powered by partner CoinSwitch, brought to you by partner BitBNS, platinum partner Facebook, gold partner Geotis, and bronze partner Huboy Global. We are now moving on to our next session on policing the adoption of blockchain by businesses. I would first like to welcome our moderator for this session, Mr. Syed Musheer Ahmed, co-founder and board member, Fintech Association of Hong Kong. Next, I would like to welcome the panelists, Mr. Ronit Ghose, Global Head Banking, Fintech and Digital Assets, Citi Global Insights, Citi. Mr. Ali Madhavji, Managing Partner, Blockchain Founders Fund, and Ms. Shikha Mehra, Co-founder, Mainchain Research and Consulting. Over to you, Mr. Ahmed.
Thank you, Shivani. And hello, everybody. As Shivani mentioned, my name is Musheer Ahmed. I'm the founder and MD of Fintech Asia and the co-founder of the Fintech Association of Hong Kong. We work to provide digital advisory and content for fintech and blockchain firms across Asia. I will first ask our esteemed panelists to introduce themselves, and then we'll dive into this discussion, which I'm really looking forward to. Why don't we start with you, Shikha?
Thank you, Musheer. By way of introduction, yes, I am currently running two companies, Mainchain Research and Consultancy. That was my entry into the space. But prior to setting up Mainchain, I entered blockchain from an legal and regulatory lens. I started off with, presenting papers and making presentations to intergovernmental organizations outside India. All my work started outside India, and and then after about 2-3 years of doing that, there was a lot of private sector interest, which is why then Mainchain was set up to sort of address the knowledge gap that corporate clients and investors and state governments required to sort of, adopt and understand blockchain. And Get Safel was born 2-3 years after that. And it is a product company. I co-founded that company with another partner company. And it is a blockchain wallet company. And we are just in the middle of closing our seed round, and we've been seeing amazing success in that. And the reason I chose to get into the blockchain wallet space, a self-sovereign identity solution, non-custodial solution, is because of my work and space and exposure to the blockchain space. This was just a no-brainer. So then it was just about getting it right. And so far, I'm loving my work and time in blockchain has been very kind.
Thank you, Shikha. Very insightful introduction. We'll now go to Ali Madhavji. Ali?
Yeah, happy to be here. So as mentioned, my name is Ali Madhavji, Managing Partner at Blockchain Founders Fund. We invested in venture build top-tier startups. We now have over 55 portfolio companies around the world. We're the first backers behind companies like Splinterlands, which is now the second largest blockchain game in the world, according to DApp Radar. We're limited partners on a couple other funds as well, like Loyal VC and Draper Goren Home. I'm senior blockchain fellow at INSEAD and serve on the board of 2 public companies in the blockchain space. One is CryptoStar, which is a Toronto Stock Exchange venture company, and the other is Mechanical Technologies, which is a NASDAQ listed company.
Thank you, Ali. Ronit?
Good morning, Musheer. Good morning from Dubai. My name is Ronit. I have a role at Citi, which is about horizon scanning, looking at what's coming around the corner in financial services, technology, including digital assets. Outside Citi, I also sit on the advisory board of a couple of fintechs and VCs. It's a pleasure to join you all today.
Great to have you all. Look, I think a lot of us have had different experiences on how we've encountered blockchain as such. For me, the first experience was about 6 years ago when I started my first job after my MBA. I was my employer had just published a report on use of blockchain in capital markets. So this is in 2015. some would say very insightful and early on. And when I went into a bank to talk about it with the CTO, he had not even heard about blockchain. And this was a major global bank. And the CTO there was like, I don't know what a blockchain is. And now we have reached a stage where I think there has been a dramatic change. And if you don't know what is blockchain, that's quite a significant shame for most people, and you will never hear somebody say that, especially people who are leading technology. So what I want to start off with is ask you about, I know Shikha has mentioned a little bit about it, but ask all of you in terms of what was your first introduction to blockchain and what has kept your interest going in the segment. Maybe Ronit, will start with you.
Yeah, it was probably from the Bitcoin perspective, and I'm sure in the next half an hour, 40 minutes, we'll be discussing all the different aspects of blockchain. But really, circa 2014, 15, we began to get really into what was happening in the fintech landscape, particularly in China and East Asia. And back in 2016, it felt, particularly in East Asia, crypto was much more widespread than it became later in the US and now all over the world. And so that was probably my first interaction, looking at it from the Bitcoin lens, circa 2016. Sadly, I didn't own much at the time, but never mind.
And what's kept your interest going? Has it been the technology, or has it been the future of money that you're quite passionate about?
I think what's interesting about the, the space is that it's a mixture of so many different things. You talked about the CTO and technology. For sure, there's a technology aspect to it all, but it's also the gateway to Web 3.0 or Internet 3.0. There's a cultural aspect to it. There's a social aspect to it. There's an economic aspect. The Venn diagram crosses over so much. Money, art, culture, speculation, useful things like trade finance. I think that's what makes it so interesting to me. The kaleidoscope.
Okay, thank you. Moving to Shikha, you mentioned a little bit about your introduction to blockchain and how you've been doing. What's kept your interest? What made you excited to also start a digital asset wallet or a crypto wallet, as some may want to call it, and continue your work with Mainchain?
So my first foray into this space and my first interaction was to a bunch of like 200-300 state regulators from the Africa region, Europe region, and India region, and this was a conference in Mauritius by the IFA, International Fiscal Association, and they meet around the world, a couple of times. So it was a really prestigious platform, and I was given 20 minutes to decode and demystify blockchain or Bitcoin. At that time, there was no real difference. It was Bitcoin. So all state regulators, AMLs, CFTC experts, tax experts, anybody and everybody who doesn't understand blockchain was on, rejection or bewilderment. So facing that audience and giving my 20 minutes and that and the look on everybody's faces and the amazement was actually, I never looked back. I could never look back beyond that point. After Mauritius, I've been traveling around the world, and the excitement and the amount of fun I've had and the amount of people I've met and friendships, and because it's so cultural and social, like Ronit just said, so it's like got a little bit of a self-filtering system. So the people you meet are willing to sort of live on the edge, take that career jump. They don't really understand it. They don't really know what they're doing, but they're giving it their all. So that's a really potent mix of smart, risky, adventurous people. And so it's pretty much the Gartner hype cycle, and navigating that hype cycle that has kept my interest going. And another thing that really caught my attention and why I kept studying, I'm a student of economics and physics from the University of Pennsylvania. I've done an LLB and LLM from India. And then, so I'm a self-trained, like, pseudo-technologist. I went and got myself a Bitcoin, the Bitcoin certificate, by the consortium C4, where Andreas Antonopoulos is part of that board and all of that. And then I got into teaching it. I got into just talking, explaining, learning, studying. So, I mean, that's what is, and there's never a dull moment. I've never done something in my life with such a steep learning curve. So that's what's kept me going. And then Mainchain and Get Safeful were just, it's part of what's just playing out as part of this journey. But mostly it's the steep learning curve and the fun I'm having and the great work. Like, I'm amazed and humbled at the kind of exposure and clients that Mainchain has been able to get, and the CEOs and upper level management conversations, and the coders, the developers, the off the grid people. I mean, it's hard to keep up. So I love it.
Okay, that's quite interesting, and you're quite having an exciting journey in the blockchain space.
Yeah.
Quite evidently, and that's great to see. Ali, what was your first exposure to blockchain as such? Was it a Bitcoin? Was it
Yeah.
somebody building something for you on the
Yeah.
DeFi?
So I mean, when I first got involved, it was definitely Bitcoin, and it was similar where it was synonymous, between blockchain and Bitcoin at the time.
Yeah.
And in reality, when I got involved, it was never about financial return, right? It was about being part of this bigger movement and future world that we saw and believe should exist. And I think that goal really hasn't changed for us, right? And even though now we do have the VC lens where return is important, our goal still today is working with incredible founders, helping to empower them to change the world and make a more fair and transparent world, right? And we've got founders driving change in fintech, supply chain, gaming, music and entertainment, all sorts of other sectors. And really, I think that's the bigger picture of where this industry and this change is going.
Perfect. Let's move on to getting into the meat of the discussion. Shikha, one of the things that we want to talk about is adoption of blockchain, and we're talking a lot about what enterprises have done. You with Mainchain, and before that, as you mentioned, working with large institutions and regulators previously, have had that exposure to enterprises a lot, right? So, what is the journey that you see for your new clients, right? What are they experiencing when they're trying to adopt blockchain or considering adopting blockchain?
So, Musheer, a lot of it, the journey is, first, there is a huge gap of understanding. Typically, large, corporate teams, they would have trying to set up a department to look at blockchain, right? And then their associates have read some stuff up on Google and then are, trying to make reports out of that and do surveys and number crunching and then coming back and, so, or not even that. Sometimes the journey is that they don't know anything. They don't have a blockchain department. They don't have a blockchain team. They haven't taken any foray into it. So they come to Mainchain to help them to just get initiated, just say hello, right? Or the client journey can start from where they already have a business vision to do with blockchain, and now they just needed to get it off the ground. So our scope of work and how we work with new clients can be either one of the two approaches. If it's a completely new client, then of course we do presentations and workshops for them first and foremost, for them to understand the technical underpinnings of the technology. So we go into the depth of that. Because I've seen when I've attended a lot of other presentations, blockchain presentations tend to focus what all blockchain can do, but not as much as under the hood. So Mainchain spends a lot of time in helping clients under the hood of blockchains, the different types of blockchains out there. And then we also get into the cultural nuances and what is the difference? Why is blockchain an institutional technology and not an industrial technology, right? It's not just a technology for producing cars, steels, or whatever. It's actually a people coordinating technology. So if you're, as a client, looking at adopting blockchain, then you have to be ready for some shifting, like power structures shifting, how information asymmetries are handled, how reliance is given on a particular It's no longer, doesn't necessarily will remain a top-down approach. So these softer aspects of blockchain and the technical underpinnings of blockchain, we spent the first 10, 15 days working with a new client on sort of drilling down on that. Then they are able to make an informed choice to go into our second stage. The second part of the journey with them starts with what we call discovery, where we are understanding that what do they really want blockchain to achieve? Have they just, like, now that they've understood more about it, how do they see blockchain fit in? Are they looking for a competitive edge, a new business opportunity? Do they have a large R&D budget in any case? Do they have a captive tech team? Or are you just a small and medium enterprise? What are your aspirations? So then we do this discovery session with them. Then we get into brainstorming and analysis and come up with a business blueprint and a technical blueprint that broadly blockchain should address these business needs. And what is the technique? It's like saying I want to use internet in my company. Everyone's using internet, so I want to use internet. That doesn't mean anything for a company to say, I want to be ahead of the curve, I want to use blockchain. But so as an example, Mainchain has serviced one of the largest tech companies in India, Asia, because they had their own full tech team. Mainchain was called in to say, okay, these are our 8-10 business verticals. Where is it that blockchain could make a lot more impact? Where is it just not a magic wand, it won't matter? Then if we were to choose 3 or 4 verticals, then how to implement it, how to design it, what should the governance mechanisms, the consensus protocols, what type of blockchains, what will be the process flow, the operational flow. So we get into designing from a business and a high level technical blueprint. And then the next part of the journey with the client that Mainchain handholds the client with is for vendor selection and implementation support. Because matching the right vendor to the corporate client, the mindsets have to match. The understanding has to match. It's not like saying, okay, build me a platform which will do this. Every corporation has its own ethos and cultural and organizational understanding of it, of where they want blockchain to fit in. And it may not want to disrupt everything. It may want to do something small. It may not want to go onto a public, open, permissionless blockchain. It may want a hybrid solution. So what kind of consensus protocols, what kind of layer 2 solutions, what kind of L1, what kind of blockchain should we use for our project? How should we design the L2? So we get into that and we do implementation support and vendor selection. And we have a roadmap usually. And the roadmap helps you choose between not only cost and time effective deadlines, but also like your go-to-market strategy. How do you want to position yourself in the market has a huge bearing on which vendor you will use. So Mainchain doesn't do the execution, but we do vendor selection and implementation support. So this is the typical journey of clients that we work with.
Great, thank you for that detailed journey. Ronit, I'm going to come to you now. We've seen that Bitcoin was the first major, if not the first use case of blockchain, but it came out from a use case for finance, right? With the need to remove the intermediary and have a peer-to-peer finance where you get the value for the work you do, computing power or validating transactions. Now, how have you seen that evolve in financial services over the last 10 years? As I mentioned, the people were looking at use cases 6 years ago, so probably the middle time of where the evolution is. What are you seeing from your seat as heading Citi there?
Sure. So we've been through at least one cycle, maybe 2 cycles here in terms of enterprise blockchain excitement and hype. Could say half a dozen years ago, we had the blockchain's going to change everything very quickly type hype. There's a lot of focus on projects, proof of concepts around trade finance, security settlement, a lot of on the wholesale side. And actually blockchain, like a lot of technologies over the last 10, 20 years, has really burst into the world through the retail or the consumer side. A lot of these wholesale proof of concepts are still going. But where the biggest impact has been is it's come out of the fact that it's become a cultural and investment and social phenomenon. And if you're in the financial space or anything else, you can't ignore it simply because so many people, so many of your clients, oftentimes so many of your colleagues are now involved in the space. Some of the numbers, whether you're looking at the US or Nigeria or India or Vietnam, of participation rates in crypto compared to 5, 6 years ago are off the charts. Half a dozen years ago, you could say, look, this is all sketchy or it's Wild West. And it was true that there was a significant amount of what you could say is illicit activity. And that would obviously put off or frighten existing incumbent institutions. And it also raises the hackles and the ire of regulators. And that's a big challenge that if you're an existing institution, you have to navigate. A lot of the times, there are three challenges I can think of. One is business model. Most existing financial institutions are built on the rails of fiat currency. You introduce something that's as revolutionary potential as blockchain, that causes a business model shock. Secondly, there's the regulatory pushback, which is most financial institutions don't like doing things without first checking out the regulator. And up to recently, and even now, there's still a regulatory debate going on about what's permissible and what's not. So those are two shocks. But the third factor is that where your clients go, normally you follow as long as it's permissible. And you're seeing this, we've seen this in all technologies. I was reading a great book over the summer break about the growth of the telegraph in the 19th century. And I think the first sort of use cases in Asia that are recorded anyway, sending messages, was for the opium prices. People from India to China. Okay, that wasn't particularly good business, but that's what it was used for before it was banned by in late 19th century. Imperial Britain allowed this. So, Bitcoin and blockchain is no different. When you start off, you start off in some sketchy areas, but it's rapidly going mainstream. We get so much client interest now, so much investor interest in this space. So that's kind of been the journey so far.
Thanks. So that's quite interesting, right? How we've seen the journey. We've seen the Jamie Dimons of the world flip from criticizing it all the way to now headline adopting and embracing it, right? Ali, as an investor, what has been your experience in the changes that you've seen, right? Are we past that ICO boom? 2017 was a significant time post the DAO for Ethereum, where you saw billions of dollars being put into ICOs, a majority of which failed, but also through that came a lot of different and successful blockchain companies, including Block One. But are you now seeing that changed? Is investment now more VC focused or token focused rather than ICO or a launch?
Yeah, I think you still have a mix on this front, right? Right now we're sort of back into a bull market. You are seeing, quite a bit of token investments, but it has changed, I would say, like quite a lot. You're seeing less public sales or much smaller in nature. You're seeing, substantially more crypto native focused projects. So you get less, say, stuff maybe in supply chain or other things doing tokens directly, if that makes sense, which you saw a lot more of in 2017. On the other hand, you've got a lot more companies also go the equity route, right? They go the equity route. They don't end up doing a token, or they might do a token much later when they have, much more traction and presence to be able to come into the world of doing a token and sort of, digging deeper into being more crypto native. We saw that with, even companies like Splinterlines in our portfolio, right? They were already one of the largest blockchain games in the world and then launched a token to further fuel that. And now they're sort of number 2 out of all blockchain games. And so you're seeing a little more of that. You're definitely seeing certain segments that have more likelihoods to launch tokens, things like DeFi, NFTs, more play to earn, stuff like that. There's definitely more opportunities, I would say, on tokens. And then you've obviously got an interesting segment that's, I would say, still early, but going to continue to grow, which is pure DAOs, right? And so decentralized autonomous organizations where there actually is no equity company and there is no leakage, that means, of this token economy. Because when you look at many projects, I would say actually the vast majority of projects, you actually have leakages in these economies because there is, say, an equity company and a token company and no clear goal on actually becoming a purely, say, crypto or DAO related company. And I think you're going to start seeing more and more of this, over the next 5 to 10 years. And it's something that maybe regulators also don't have a handle on yet, but I think it'll come faster than they expect.
Yeah. Sorry, just to add to Ali's point, that's exactly where we are on Get Safe's journey. We're soon going to be transitioning into, a foundation structure where and a DAO. We're creating our own token economy as well. These are Safe tokens, and so and as an incentive alignment, engineering play, and then we all understand crypto economics and token economics, and so and that's a huge thing, and it took a lot of back and forth for us, like as a startup for a digital wallet company and a Web3 provider company, right? What role will the token play? How will all the relevant stakeholders? It's like it's solving, like when everybody owns everything, everybody's got a stake, and blockchain and the incentive engineering ultimately solves for the tragedy of the commons. So if you pull that into your token economics, then I mean that's exactly what the page and the journey that we are on. As I said, we're just about closing our first round of funding, and then we're going to be in the next couple of months DAO.
Perfect. You have Ali right here, and he's listening in. So
for sure.
Perfect time to impress him.
Yeah,
right? Yeah,
for sure.
Great. Ronit, I want to come to something that is very close to your heart, and we've had this discussion for a while about what role does, we've spoken about financial institutions responding to blockchain, adopting it, and there is consensus that this technology is moving forward. But what role do you see blockchain playing in terms of the future of money, right? Will our futures be driven by digital currencies, either state-backed digital currencies or stable coins, where feasible to connect these? Or are we going to see two parallel systems run where you have actually three parallel systems, cash, traditional digital payments, and then the third one being CBDCs for the next 10 years? Because cash and digital payments have been running side by side for a majority of the last 2 decades, and even though there's transition, cash hasn't really died yet. So
yeah, it's a super interesting question, and Musheer, you're right. We've been talking a lot about it this year. And the way I think about digital money that we're talking about today or in the future, I would differentiate it from electronic money or digital money 1.0. So what we've had probably from the late 50s, early 60s in the US, say North America and Western Europe, is you took the traditional financial system. Modern banking has its roots in Renaissance Italy and industrializing Europe. That's where kind of modern banking comes out of. The core concepts, whether it's double entry bookkeeping, everything from modern banking got put onto mainframe computers. So 1950s, 1960s. Initially wholesale banking and then consumer banking. Now, we've had in some way or the other, and it's not even 20 years, decades, we've had this kind of digital, or call it digital money 1.0. Digital money 2.0 is different. And it's different because it's not just taking the existing financial system and putting it onto a computer. It's different in terms of model, functionality, you name it. Just to break it down, I mean, first of all, the old system is based on, call it account-based money. I have money because there's a diary entry in the bank or the credit institution. Some of us had passbooks like when we were kids, right? You go to the bank or the building society or the credit union, and literally, I guess I'm aging myself. You had a little diary entry, £1 deposited or ₹1 deposited or $1 deposited. And it was literally banking books that, you had in the Middle Ages, those got put onto computers. I have money because there's a diary entry initially on scrolls for the last 50, 60 years in a computer database. Digital money 2.0 is that I have money because there's an atomic version of money on my smart device or wherever it is. I don't need it to be a diary entry. So the structure, that's the first and important difference. The structure is different. And it can be centralized or decentralized, but the technological structure is different. The other big difference is the value. And this is where you get the difference in centralization and decentralization. Digital money 1.0 is always, electronic money is always linked to fiat, and fiat used to be linked until the 1970s to gold or precious metals. It kind of varies over time. Fiat first comes around about 800 AD or so, and for about 1200 years, you get on and off. You go off the gold standard, you go off this, Chinese emperors basically start issuing IOUs that say on it, this is money, and if you don't accept it, I'll kill you. So people accept it. It's basically a brutal raw form of the state. Money is power. So that's fiat. Now, digital money 1.0 is simply that model. Gold disappears in the 1970s and Bretton Woods falls apart. You put it online. Digital money 2.0 is different in that it can be like CBDCs, and obviously the Chinese, and Musheer, you're much closer to this in Hong Kong than I am. I just study it, you probably live it. The Chinese have for now 6 years or so, maybe longer, been working in white paper stage, pilot stage, and now since early 2020, it's out there in the wild, ERMB. It's not blockchain based, but it is programmable and tokenizable. It's smart money. And that's another big difference to digital money 1.0. Digital money 1.0 is just an electronic ledger entry. Digital money 2.0 is smart. You can do things with it, which is why policymakers love it, because they can drop money into your whatever smart device and they can program use cases, time, duration, interest rate, whatever. Now that's all great if you're a policymaker. If you're a citizen or a consumer, there are all kinds of questions, and maybe that's another very long conversation to have. So there are huge differences between digital money and what we're going to be talking about and what we are already talking about to the last 20, 30, 40 years of e-money, if you like. So I could talk forever on this topic, and I'll shut up. If people are interested, we've written actually quite a lot on this. You could just Google my name. Sorry, this isn't a plug, but it is a plug. You can just Google my name and look for Future of Money, and it'll hopefully pop up the reports.
And there are quite a few very interesting podcasts Ronit has done, including with one of my clubhouse clubs. So quite a lot to listen. Ali, coming back to you now, right? As a VC, when you're now evaluating these blockchain projects, and I'm taking both pure blockchain projects, which are focused on the technology and building the technology, as well as crypto projects, which are looking at DeFi, and there's a whole vision and concept of change behind it. What are the key elements you're looking for when investing in it? Is it pure standard thesis of looking at the founders, looking at the idea, or are you looking at how much of this thesis is based on future application needs?
Yeah, there's a couple of parts in the way that we do things, which I think are also quite different from many other funds. We actually have close to 90 different things that we look at. The challenge is at an early stage, we can't always answer a lot of those questions, and so we end up having a lot of blanks, or unknowns in sort of those spots. But it's everything from, team is obviously very critical, their ability to execute, looking at, their tech stack, where they are in that, their ability to hit some of these goals, looking at, if they are going to have a token, all sorts of details around the token, looking at any sort of traction points, product market fit. We go into companies all the time, though, that are pre-revenue, pre-product. We go into things that aren't sexy all the time. When we went into NFTs originally, no one was talking about NFTs. No one cared about NFTs, to be honest. And so, we were always open to testing out and looking at different things. And if we believe that there's a world where this could exist and be mainstream, it's interesting for us. And then we work very hands-on with our companies. And so we're looking at things like, how coachable are our founders? Can we work with them hands-on to solve key problems, that they might face and open up a bunch of doors with them, et cetera. So we do have a little bit of a different way than many other funds. And we do go into a lot of companies sort of pre-seed, seed stage, right? So we're planning to back another 200 companies in the next 4 years to give you an idea.
Okay, that's tremendous. Maybe one of them will be Mainchain or the new wallet. Coming towards, look, we probably have about a few minutes left. So I want to know what, for each of you, is the future of blockchain, right? We spoke about Web 1.0, Web 2.0. Some people are talking about blockchain 3.0 already. 1.0 being Bitcoin, 2.0 being Ethereum, and now we're looking at 3.0 with a multitude of interoperability. What does blockchain 4.0 look like for you? Obviously, the pace of growth in the cycles are much faster. What does that look for you? Shikha, you're there consulting, advising enterprises, governments, and players like us. What is your vision of blockchain 4.0?
Blockchain 4.0. So I mean, I ultimately see, like all of us interacting with each other. Now that with each other can be as organizations, within organizations, or as DAOs, right? But essentially through our own personal currency, like eventually through a whole. So I'm going into the metaverse and how, and I'm taking tokenization to the edge, right? And I am saying that, and we will essentially, and when I say personal currency, I mean that ultimately it will be a bartering system. But the reasons that bartering failed beyond the Dunbar's number, right? Those reasons to fail and for it to collapse, bartering, are getting fully addressed by blockchain and tokenization and as we move ahead. So we would have, as humans, and this vision is a lot more personal control and agency over our time, how it gets compensated, over our attention, how it gets compensated, leveling out of information, asymmetries, and I hope that will ultimately bring a change in the Eldorman's trust barometer. If you look at the Eldorman's trust barometer for 2021, there is widespread misinformation. There's actually an endemic, a pandemic of misinformation and societal distrust in organized structures and the way humans organize their social and commercial lives. Our social lives are all on Facebook. And, so for me, that vision and what I see blockchain ultimately doing is turning Ronald Coase's theory of the firm on its head, coming up with an excellent, sustainable solution, solving for tragedy of the commons, and and via tokenization, via token economies, via having a token like an artist token, an art token, a fan token, right? I can go like what I've earned in one game, take my earnings and own it and go to another game, moving from free to play and earn to play models, and so all of that. It's just taking all that out to the edge. But and I hope to be in some meaningful way part of that change.
Great. Ali, what's the future for you? How are you seeing, what would be blockchain 4.0 look like for you?
Yeah, absolutely. In the way that we look at it, I think it's just continuing to that goal of a more transparent and trustworthy world, right? And whether that's, looking at NFTs and the ability to track digital ownership of anything, right? And we're seeing that's only the tip of the iceberg right now, all the way to DeFi and opening up this world to everybody and being inclusive, to the over 1 billion people that are unbanked and even without identities to be able to sort of access the financial world. And so there's all sorts of, I guess, important segments, I think, that are going to emerge that are changing the world as part of this 4.0 vision, I think, of where blockchain is going to have a major impact.
Okay. And as an investor, one of the things that you need to play is look into that crystal ball, right? Because you are betting on what the future needs so that your money at work gives you the right rewards. So what are you feeling from an investor sentiment? Is there a segment of the blockchain world that people are more attracted towards or gravitating towards?
I mean, we always have our hypotheses on certain areas, but the thing is, like, we don't invest only on where our hypotheses are. And the reason is because this industry is so innovative. There's so many areas that we've got to keep in open mind to different areas. And as I said, like, we'll go into things that aren't sexy. I mean, this whole industry trends, right? So we've got a bunch of companies in the NFT space, but we've got a bunch of companies in areas that people aren't talking about, yet, that we're open to experimenting with. And that's part of, I think, building this sort of future where various parts of this industry, various industries itself are going to be transformed, from this technology.
Yeah, the proverbial buy the shovels when there's a gold rush, right? Because there's always going to be money in there. Yeah.
Sorry, if I could add to that, to what Ali is saying. So what Mainchain also does is it works with prospective investors and takes them through an investment journey, which would mean that we tie up with funds, because we have a lot of HNIs and family offices coming to Mainchain, starting off their journey, wanting investment exposure into the space. But again, there's a lot of FOMO, there's a lot of myths, there's a lot of, so we help them sort of take these kind of calls and expose them to the non-sexy areas, to the non-hype areas, right? And sort of, so we work with funds from around the world where Mainchain's job is to understand their investment thesis and how they are investing and looking at projects, and then matching that with investors. Some investors will come in and say, I want to buy cryptos and forget it for 5-10 years. Oh, but no, I want to get into this space and I want a 100x return. So I don't want Bitcoin, because I think Bitcoin, you're not going to get 100x, right? So I want to go. Or some investors will come in, I want to manage my own private keys, I want my own wallet. Someone will say, I want a regulated custodian, right? Of course, there are a lot of questions around regulations and uncertainties and tax implications. We have seen so much of investments coming in from power companies wanting to invest in the mining space, right?
Sure.
So then again, so navigating that. So this investor journey, I mean, in this discussion, I only spoke about the enterprise client journey from a way of blockchain adoption. But the investor journey is just as exciting. And again, we don't do the fund management. We don't do what Ali is doing, but we tie up with funds like Ali's that there is some synergy with, and then present those options. And the investors come up all, some of them are very technically ready and aware. Some of them just want to play around. So we devise strategies for, different types of investor mindsets.
Perfect. Yeah. I think that's important, right? I think there are different investors at different levels of understanding and education, and there's a journey that everybody goes through. Quite a few times, being an ex-trader, and Ronit would have the same experience, you put in some money to know more. I'm going to give Ronit the last word on this. Ronit, we've spoken a lot about what the future is. Quite a few people talk about hi-fi, the mix of DeFi with existing this thing. So basically hybrid finance. Jehan is a big believer of that despite all of his investments in this, where he says, the future is going to be where traditional finance will meet decentralized finance. Maybe CBDCs is hi-fi in some senses. So what is your view of blockchain 4.0, and when will we reach blockchain 5.0?
I wish I knew, Musheer. The old joke about don't make forecasts, particularly about the future. I'll defer to Ali's comment earlier about you got to keep your opportunities open, your options open, whether it's intellectually, financially, investment perspective. You don't know what in 12 months' time or even 6 months' time is going to be an important, relevant part of this discussion when it comes to crypto or Bitcoin or Web 3.0. For me, sort of one of the attractions of Web 3.0 or using blockchain here is you're getting financial autonomy, rewards. You could say the creator economy if you want as a short form, but you're getting it out to, it's like you're getting it out to the performers, you're getting it out to the artists, you're getting it out to it could be the writers, the publishers, it could be, machine, the trader rather than the firm. And And that has, in a way, it's a really old idea. Right, if you listen to sort of Mark Andreessen talk about the Mosaic browser, he wanted to embed digital money into it. He spoke to Visa, MasterCard banks, and the technology didn't exist in 1993 to do it. And so we're just catching up with the original sort of vision, if you like, for the consumer internet. So it's an evolving one. One sort of final throwaway comment is we talk a lot about decentralization, and this might go back to your hi-fi point. And when I hear people talk about the decentralization from a value perspective, it's really interesting when you go back to the origins of Web 1.0. It was all about information decentralization. If you read the stuff being written in the early 90s, mid 90s, it's all about, we're getting the information now. It's like, instead of having the New York Times or Doordarshan as your centralized source of information, and actually look at it today, 20, 30 years, actually 30 years later, we were promised information decentralization. What do we have? Giant platform companies. And so this is the kind of interesting, your hi-fi point. Are we going to end up, after all of this chat around financial decentralization, with the irony of ironies, if actually tokenization, digital money 2.0 further entrenches the power of these big platform companies? To be discussed. They'll make predictions about the future. Thank you for having me on the panel.
When Bitcoin came about, the idea was that the powers will go away from banks, but a majority of the global banks are much bigger and are more, it's more hard to fail right now. It's going to be a difficult journey. So,
well, actually, the big tech platforms in the last 10 years, so if you take the 12-year journey of Bitcoin, the transformation is, people talk about big banks, but they're small compared to the reach and power of big tech platforms.
The $1 trillion companies, right? So
I
see Shivani.
We don't live inside Jamie Dimon's pocket like we do. Well, let's not get into names, but
well, he's going to be funding that and supporting them for their fundraisers or investments. Right. I see Shivani on standby, so I guess our time is up. Look, this has been a fascinating conversation, understanding how consumers are going through a journey, investors are looking at the market, as well as what the future of money is, right? So thank you all for your wonderful views, and thank you to Hodel Conference and IMAI for having us today. Over to you and back to you, Shivani.
Thank you so much, everyone, for such an engaging discussion. A special thanks to all our panelists and the moderator here for being with us here today and making this possible. Another thank you goes out to our audience who are here with us today. Thank you so much, everyone. We'll be back shortly with the next session. Stay tuned. Thank you.